Okay, guys, let's do a little bit of rack and stack on the DAX.
Wait. Matron, take them away.
Hey guys, hope you're well on this fine Friday morning. What we're going to do is I'm going to build up a chart and trade it. Now, the chart I'm looking at is the DAX, and it had a colossal move yesterday off the CPI. And we're now looking at the fallout, but there's a national holiday, so Forex markets are pretty flat today. And I don't particularly like trading on a Friday anyway, so I'm just going to stick with a single asset and see what I can get out of it. I'm absolutely knackered because I didn't finish till early hours of this morning because I stupidly stayed up to trade the Asian session. Did all right out of it. Did all right, but now I'm paying for it. Anyway, let me flick this on and we'll have a look. What I'm going to do is I'm going to build up this 15-minute chart and see if we can sort of get an idea of what rack and stack is. Now, you can see it had a solid move here, and it's now just, well, it's in that grinding motion. Now, I have kind of put my buy sheets up as I do all the time. And for the DAX for this hour, there isn't a direct trend with it. So what we're going to do is I'll pull up my MT5 just so that I'm not marking this up over and over, because I often have this on the other side as well. So just so that I can illustrate this before I build this up. That's the same chart, but I have my levels in. What it's doing at the moment is it's holding below this level. Okay, it's rattled it a few times to try and catch it. But what I'm kind of looking at is this 127 extension, which, as you can see, is off the same move. And we are hooking back round on the RSI back into positive territory. But this here, normally when you have a move of that magnitude, there's some form of retracement because it's got to run out of steam. Well, it has run out of steam, but it's not really coming down very quick. And even if I speed this up and make it into a momentum, shift that down, you can see it peaked here at this point, okay, and then started coming down, but it also got down underneath and is now moving up. So this is one of those situations where the retracement's out the window. But what it can give you with the fib, etc., is looking to find logical points of entry to continuation trade, if you like. But let's just take this out very far just so I can show you. Now, on the monthly, yes, it looks mad, but you don't trade off these levels, off these charts. You just look at them. We're up. We are aggressively up. So we're up. The weekly is up. And the daily is up. Right, so kind of gives you a heads up. 4 hour. Well, you can kind of see that's pretty much up as well. And then you come down into the hourly, and obviously that is up. So there is kind of an overall bias to the upper side that we can see. So if that's the long term, that's kind of what we want to align ourselves with. So let me just flip a couple of things onto my screen, and then we're going to build this up. Okay. Because I want same settings for this. Just a second. There we go. Okay. So if we're assuming that from the 4 hour, the hour, now the hourly is actually pointing down slightly. There's a little bit of downward pressure. but the daily's definitely up. And the 15 is curling round. Basically, what we're trying to do is align with the main direction. Now, what I've done there is I've just quickly flipped through a multitude of time frames to get a basic feel of what's going on. And my feeling is this is to the upper side. So let's put in some key points that can help us, right? And this is why I want to do it just with a clean chart using a single idea. So we know that is the move, all right? So what I'm going to do is I'm going to put in some levels on that, which is kind of, that's the top of that move. There. And then down in, we'll take it down to the 50 because I don't think it's going to pretty much get that far today, because I think it is looking at the continuation. So that's that there. And I'll put the baseline in as well, which is there. So I'll get rid of that. Okay. So we know that's the range of the move that's probably going to be driving this move. So let us put an extension on and see where those extension points can run to. So you run that down to there to there. All right. And what you're doing is you're building up a picture. Okay. So that's the expansion point. Okay, well, if that's the case, we're going to make that one solid so we know where the top of the move was. All right. So what have we done here? Well, I've created a trading arena just using fibs from a single candle move that I know is an accelerant. Now, an accelerant is an overextended candle. And what that shows is massive volume in the market. Shows also the key points of retracement, because you can draw your fib on it, because you've got two fixed points. You know where it started and you know where it stopped. That is what you're going to base the ratios on. Then that creates simple levels that you can work against. Now, the levels that are in play aren't a million miles away from my solid support and resistance and my overlining high time frame fibs. So this is telling me just off that market that this is pretty good to go. And then all I have to do is I just need to drop it into a simple situation. So if I'm going to drop an RSI on, it's an RSI. I want to change that to 50 and that to 50. And what I've done now is I've now got a momentum meter that's telling me it's looking to the upper side. I know I'm going to the upper side. So is it now not common sense just to buy it? And I've got areas of attraction that I think it's going to get to. I'll drop it down onto a 5-minute chart. Well, there we go. Still upper side. I can see volume coming in. And I've got a lovely target up to there. I can candle count 1, 2, 3, 4, 5. Now have an area of attraction where I can start entering the market. So just above there, here. So I can drop in some stacked orders there, and I can stage down into this because I'm expecting it to bounce off that and move up. So let me do that. We'll have a little look. So we're going to buy it. Buy it above that candle, and we're going to price bounce this as well. Now, price bouncing is what you saw me doing yesterday. Now, basically, it's the same order but stacked. In other words, I don't really want to spend my time just chewing on over and over looking for a few pips. So all I have to do is stick a few orders in the same place with different targets. And it's a very, very simple process. Okay, so we'll do that. stack this up, guys, and I'll just sort of put in my 20 pips, whatever it happens to be that I'm targeting to. 5 on that one. Good. Right. So, what's the process now? What are we doing? Well, in order for me to stage backwards, I need to have a fixed point. Well, that's the first entry. I already know where my stop is. You know, my stop is two points away, 2 structure points away. And then I will stage into that stop if I need to. So everything here is set up, right? And all I have to do is trail this price behind some candles. Now, I'll leave my 15-minute on my other screen. And as the price moves against me, I will follow it down, get triggered in, and then in we go with the price bouncing. And that's it. Nice and simple. You know, because I've got nothing running. And I did quite well last night on the Aussie 200, which is why I'm knackered. Because as you can see, it was in the middle of the night. But why was I doing that? Well, it was because of that silly move, and I was looking to fade or retrace, whatever you want to call it, the move that came in, and it was caught in a similar situation to this. Nice, easy way of doing things. So that's what we'll do. So I'm going to run this trade and see if we can get a few quid out of it. I'm not looking for miracles. I'm happy with 20 pips out of this, which it'll give it a reasonable amount. You know, anything over 50 quid is a bonus. And that's the other thing, guys. Deal in money. Don't deal in percentages and things like that. Don't mean anything. You say, I've got 2% of my account at risk. Yeah, fine. But what does that mean? You know, 2% of a tenner is nothing. 2% of 100 quid is 2 quid. Who cares, right? 2% of 100,000, that's a different kettle of fish, right? We still don't know what it is. But if you turned around and said, I've got £1,000 at risk here, then it becomes real. You know, if you're looking at your account, you've only got 500 quid in it, and you've got one trade that's at £100 risk. In other words, you're £1 a point and you're 100 points away. That's too much. Makes it real. So you ask yourself a question. Am I happy to play this? No, I'm not happy to pay £100 on it. I think it's bloody stupid. Fine. Half it. Am I going to pay 50 quid for this? Maybe. Well, not maybe. Be binary. Yes or no? Well, no, I'm not. Right, well, half your position again. Well, how much is it going to cost you now? Oh, that's 25 quid. I'll do 25 quid. I'm happy. I'm at peace with the chart. And if you're in peace with the chart, it doesn't matter what the outcome is. If it's positive, amazing. You know, you got rewarded for what you were doing. If it's negative, so what? You were happy with it before you press the button. Makes trading easier. So much easier. And that's why I already know what my risk factors are before I press the button. Because in the 15-20 minutes running up to the top of the hour, I've already worked it out. So when it comes to the top of the hour and I start looking to trade, I'm very calm, I'm very relaxed because I'm not anxious against it. If it loses, so what? But if it wins, result. So there we go. Let me run this out and I'll do the price bouncing. And in answer to a comment that I got on yesterday's video, which is why I'm doing this again, about they don't get it because I work 20 minutes a day. You are so wrong. You are so wrong. It is unbelievable. I work more than any 20 minutes. What you see is a 20-minute pressing the button, but I spend a good few hours understanding what it is and why I'm going to press the button, because the why is far more important than the how, and that bit you don't see. And if you think for a second that trading is just X marks the spot and you click a couple of buttons and you're rich. Go work in McDonald's. You'll earn more money. What we do here is a professional job. You need to live and breathe it, understand it, but know when to walk away from it as well. You know, I'm taking the weekend off. I'm not doing anything Monday, Tuesday. I'm not even switching the computer on because I know when to walk away. But if you live and breathe it and you think that you're this hero, I do this with the charts and I'm constantly monitoring the charts. You're not. You're an idiot. You're a wannabe. It's a job. You do it. You get paid. You walk away. That's trading. The other one is gambling and just being dumb. Big difference. Let me run this out and see if I get paid, and then I can walk away. Okay, guys, it's coming on to 3 o'clock. It's late Friday afternoon, and I've been bouncing backwards and forwards, as you've seen. And one of the beauties of price bouncing, like what I've seen, or what you've seen sort of over the last couple of hours, the price hasn't really gone anywhere. Not really. It's just gone up and down, bouncing, rattled around this level. Now, it could easily rocket up, because that was the overall trend, but it could easily rocket down into that big spike that it was the other day. And I don't want to hold this on a weekend. So what I've done is I waited for it to go net positive, because I've already banked a fair bit, and then just kill it. There you go. that is the result for the work. And I think that's, well, I think that's pretty darn good. In fact, what is it for that last couple of hours? Let's have a look. So if we are 42660, and then if we minus off what we did in the Aussie session, so that was minus 50, minus 50, minus 50, 2, 3, minus 100. Is that right? It's 100, 200, 250, minus 2550. 151 quid just for watching the price bounce up and down a little bit. I can kind of live with that. Can you? Is that right? Let's just check that again. Where are we at? 50, 100, 152, 250, 275, 50. So 42660 minus 100 minus 100. So that's 100 minus 75, 50. Yeah, 151 quid just for watching the price do that. Now that's what racking and stacking is all about. Now I've got nothing else running. I'm flat for the weekend, so I'm more than happy. I can live with that. And will the price rocket up? Possibly. Am I bothered? Not in the slightest. Because when I'm looking to trade, I don't do it the way that most people do. They will hang on to grim life because they're so desperate that they can't see a red mark on the screen. I don't care. I'm not bothered. You know, what I'm starting with is 0. What I'm ending with is 1. What happens in the middle, couldn't care less. Not bothered. You know, I could have it go positive, I can have it go negative, I can have it sit in the middle, as long as I end with more than I started. That's the art of trading. That's the mindset of trading. And when you get into that and you start working the charts, suddenly you find your win rates start getting quite good. Why? Because you're concentrating on the job, not the flashy lights. And it's a discussion that we had this week about how brokers can suck you in, and it's almost like a video game. That's what makes it addictive. And it's kind of the wrong way. You're better off looking for the dominant trend, the double D, you know, and there's sort of various double Ds. You've got the deep trend, which is very high up, like what I showed you. You've got the medium trend, which is the here and now day trading trend. And then you've got the micro trend. And if they all line up, oh, fantastic. But if they don't, look at the one in the middle, because that'll give you a fighting chance. If you look too far down the chart, you'll get lots of signals, but they're weak. But if you look too high up the chart, they're very strong, but they're very slow. So in the middle's where you want to be. But if you can align them all together, you're laughing. Simple stuff. All right. Something that I try to show the guys in the squad all the time. And one of the reasons I do these videos all the time, one, it's for my own benefit because it is a visual journey for me. But also it's shown you guys that this can be done and can be done consistently. And you don't have to be a slave to the machine. Do your homework, set it up, a little bit like what I've just done. The reason why I stacked them is because I don't want to be carving backwards and forwards. I'll just let it get on with it and do it itself. I've been answering all my emails, sorting everything out. Time management. So there we go, boys and girls. Got any queries, drop it in the comments below. Do subscribe. If you're stuck, you can find me on all my social media contacts, and those details are below, as are details of the Scruffy Squad. Black Bull, recommended broker, where you get 500 to 1. And if you want to try the prop fund, there's 5% discount there as well. So as always, guys, trade well, keep your risk managed. Above all, do what you love, and the money will follow. See you all in the next one.